In part one, we calculated the correct net profit after tax, and we also calculated the closing value of some of the trading stock that we had. And now what we have to do in the next question is we have to do the SFP. So remember, you're going to start your statement of financial position with the amounts provided as per your trial balance at year end. And then you are just going to adjust your amounts according to the adjustments in the information that follows. First of all, the important thing here is to note what goes into my SFP, and that is all of my balance sheet section accounts. Okay, so only balance sheet. Sorry, I'll be right back. Just give me a moment. Right, so all our balance sheet section account, because nominal accounts will go to our SOCI, Statement of Comprehensive Income. Right, so let's just quickly read through the information to see what has to go to my SFP and how it will affect my SFP. So the first transaction, we already said in part one that this is definitely an SFP transaction or then adjustment, because it said that here we recorded this specific stock item, we recorded this twice when we calculated our final stock figures. Therefore, we have to go to the SFP, to our inventories, right? And we have to deduct the amount. The reason why we are deducting the amount is because we recorded this twice. So we need to remove the cost that has been recorded twice. And the amount that we calculated, we already did this yesterday. Oh my gosh, I'm already on that one. There we go. We already did this yesterday. Well, I did it yesterday in part one of the video. There we go. There is the value of the closing stock, 336,000 Rand. So 336,000. Okay, right. Then the second one is that a debtor with credit balances or debtors with credit balances must be transferred to the creditor's ledger, and then the provision for bad debts must be adjusted. So yes, this is most definitely SFP, because first of all, we have to go to trade and other receivables. There we have to add back the 12,350, because remember in the previous video, I did that ledger account where I showed you if it is currently in a credit, in order to get it out of the credit in the debtors control account, I need to debit the debtors control account. And because debtors control is an asset, whenever I debit the account, it means that I'm adding on to it. Then I also have to go to my trade and other payables. There, I have to now show that I have additional creditors because I'm transferring debtors with credit balances. In other words, debtors whom we owe money to, transferring that to my trade and other payables. Then the provision for bad debts that must be adjusted. So remember, we already calculated that as well because we had to adjust our profit for the provision for bad debts. Okay, so there we calculated our provision for bad debts where we took our debtors control after the adjustment was taken into account, and we then calculated 4% thereof. So 36,074. 36,074. That's why I prefer doing my either SOCI or then the profit calculation together with the SFP because it really saves a lot of time. But I'll try and do another video where I do them simultaneously. Right. Then we had the case where the vehicle was bought on the 2nd of Jan, and we said that that's pretty much the same as saying on the 1st of Jan at a cost of 450,000. So once again, we have SFP because this over here is fixed assets. So fixed assets. And this was sold for cash. So cash meaning bank in cash and cash equivalents. And then also you would have had your accumulated depreciation on your vehicles account as well. And then the profit or loss is shown in your statement of comprehensive income. Right, then we had the following. Insurance includes an annual premium paid on the 1st of December. We then said, right, so only December, Jan, and Feb is included in my current financial year. So the other 9 months, why is it giving me that now? The other 9 months is therefore a prepaid expense. So we need to calculate of the 1,540, what is 9 months out of that, because that needs to be reclassified as a prepaid expense. So 21,540 times 9 over 12, 16,155. So 16,155 is not to be included. We already did that in the previous video as well, but I don't want to keep on going between the screens now. Okay, so there we go. Then rent is calculated on a fixed amount per square meters. So what we then did is we calculated the total square meters that we lease out for the full financial year. And then we added onto that the rent that we received up until the 30th of April. So we added another 2 months to see what the amount in the trial balance represents. So there we go, the 213,300. We then said that the 2 months that we received in advance may not be included in the SOCI because it is income received in advance. And that goes under trade and other payables. So yes, indeed, this is also an SFP. See, now I'm going there anyways. So rent income, we calculated that as 32,400. There we go. So 32,400. No new calculation required there. Unused consumable stores. So that is removed from consumable stores and reclassified as inventories under current assets in the SFP. Then we also have 2 directors who haven't yet been paid for 2 months each. And we calculated those fees. There we go, using the total number of months that we actually made payment to them. So to all of the directors, took the months and we said, okay, if according to the trial balance, this is what I paid for the full 44 months, we said divided by 44 to get the monthly directors' fees, and then times by 4, because 2 directors haven't received their fees for 2 months. So 112,500. So 112,500. And this is an accrued expense to be included in my trade and other payables. Then we also had the income tax for the year. And the income tax for the year was calculated as 1,069,800. So 1,069,800. We now need to determine, do we still owe SARS or do they have to make a refund to us? So this is the, this is the income tax amount. There we go. Okay, then the fixed deposit will mature on 31st of August, so meaning that we will no longer have a fixed deposit, but we will still look at that info, but that's definitely SFP as well. And then the following financial indicators were calculated at year end. So they are saying that current ratio is 2:1. In other words, for every R1 in current liabilities, let me start here. For every R1 in current liabilities, I have R2 in current assets. Therefore, I can also say for every 1 rand in current assets, I have 50 cents in current liabilities. Okay, same thing, just writing it in different formats. Okay, that's why it's important that you actually know your ratios. Then the net asset value per share was 425 cents. In other words, you need to know, obviously, once again, your formulas. I just want to move that here and here. Okay, there we go. So net asset value per share, how we calculate that is by taking our shareholders' equity and then we divide that divide that by the number of shares in issue. Number of shares in issue. Then we times it by 100 over 1 because we want to give that in cents. And that then gave us 425 cents. Okay, so we will use this at a later stage to most probably calculate shareholders' equity or the ordinary share capital, we shall see. Next up, the company is registered with an authorized share capital of 1.5 million. So that is the maximum that you are allowed to issue. On the first day of your current financial year, 75% of the authorized shares were in issue. So 1.5 times 75%, so 1.125 million. 1.125 million. Okay, so this is the number of shares were in issue. And then the average share price was 3.20 rand. So times 3.2. And that's 3.6 million rand that you then received. Let's write that over. I'm going to do this to create more space. There we go. 3.6 million rand. There we go. Then on the 30th of April, the directors issued all unissued shares. EFT payments were received. So we received 900,000 rand. There we go. And we issued all unissued shares. So we have 1.5 million to issue. We have by now issued 1.125, so 375,000. 375,000. That is what we issued now. Okay, so in other words, on this day, 1.5 million shares in issue. And then the total ordinary share capital that we had was 4.5 million. Okay. Then it says that the company repurchased 250,000 shares. So no longer 1.5 million shares in issue because we now decided to buy back some of the shares. So we only have 1,150. There we go. Okay, we can double check. It's okay, I'll double check. 1.5 million minus 250. Oh my gosh, what did I do now? Is it 250? Oh, I thought it was 350. Sorry, my bad. There we go. Good thing I checked. So 1.25. I didn't read properly there. Okay, right. So remember that you can only remove from your ordinary share capital whatever you put into that account. That is why you now at this point have to calculate the average share price. And the average share price is your 4.5 million total ordinary share capital divided by the number of shares that you had in issue when that was your ordinary share capital. And that is 3 rand per share. So in other words, when you now remove the 250,000 shares from your ordinary share capital, you can only do so at 3 rand per share. 750. There we go. So you no longer have the 750. Righto. Why is it doing that now? Okay. Right, so your share capital now is actually 4.5 million minus your 750. 3750. 3750. Remember, I'm doing all of the calculations on my question paper now, but you need to show all of this in your answer book. The only reason why I'm showing it on my question paper is because I don't want to go back and forth between two files, but you will have a question paper and answer book, so it's easy to do your calculations in your answer book. Otherwise, you're not going to get part marks. Okay. Right, so that just gives us an idea of our share capital. Then the loan statement showed a closing balance of this. So you need to show whatever the loan statement has as a closing balance, that is also your closing balance. The company plans to increase their loan repayments in order to settle 15% of the capital balance of the loan in the next financial year. So in other words, we have a current portion of loan. So we are saying that of this amount that's still outstanding, we want to pay 15% in the next financial year. And that means that 15% of your total loan amount will then be your current portion of loan. So yes, we are still in the SFP 39305. So this is your short term. Then to see your capital balance then after that, 39305. So the amount that you will still owe, the capital amount still owed by the end of the next financial year will be this amount. So this will be your non-current liability. Okay. Then it also says that a fixed interest of 5,800 is paid per month. But remember, you only reclassify the capital portion as current. You do not do it for your interest as well, so ignore. And that was the last one. So now let's go to the top again. Right, because we always start with our trial balance amounts. First of all, it says here loan, but it's fine because they just gave us the loan balance in the last information. So we're just going to say we're done with that when we don't need that. Then the fixed deposit is currently at 225. So 225,000. Please also note that they said here, please don't calculate the final answer or give the final answer. So ignore the grayscale lines. Then trading stock, yes, we do have that, 135, so we're sorted. Debtors control started on 889,500, we have that. And then SARS, income tax, provisional tax payments. So I'm going to draw a quick T account. Let me draw it here. Okay, so quick, ooh, gosh. Remember, this is now just a draft account, so I am going to only say SARS. We know what it is, what we are doing now, SARS income tax. There we go. Please don't do this if it's an actual T account. Right, so we made provisional payments, which means that we are debiting this liability account because we don't owe them 990,000 Rand. We've made provisional tax payments. Okay, right. Then it says that the bank is favorable. So cash and cash equivalents, that's there already as well. Creditors currently on 843750. We have that. Shareholders for dividends. So that's a liability. So we'll go here. Shareholders for dividends. Shareholders for dividends. So we haven't read anything about dividends up until we got to our trial balance. Well, we should have read the trial balance first. We did that in the previous video. So there's no other information, which means that this is correct. This is actually the dividend that you declared at year end that you haven't yet paid. So you can just enter that amount in there. Then your provision for bad debts, we know that that goes together with our trade and other receivables, but we had an adjustment. And then pension fund. So pension fund is a question mark to be included in my trade and other payables. So I'm probably going to have a situation where I have to balance the statement of financial position, but we shall see when we get there. And that was it. Now moving on to the information again. So we said that we need to deduct from the trading stock the stock that we recorded twice. So we'll go to trading stock and we'll say that we actually don't have that. We have that less 336,000. Righto, and that's it. Next up, debtors must be transferred to creditors. So we said that we must add back, in other words, we are debiting debtors control, and then we are going to take that credit to our creditors control, trade and other payables. So 12,350. Okay. Then the provision for bad debts must be adjusted to 4% of the debtors. So in other words, yes, this is what I have as a debtors balance. This is what my debtors owe me. However, I don't see myself recovering this amount, and I want my financial statements to be accurate, and I don't want to overstate any amounts. Therefore, I'm going to deduct the provision for bad debts. Then a vehicle was bought. Was now disposed of. So we don't have to do the fixed assets. So I'm just going to ignore that 450 cost. But it was sold for cash for 65,000 Rand, and no entries were made for this sale. So in other words, the debit, or first step, let's go back. Debit your asset disposal with vehicles, the cost. Then credit your asset disposal with the accumulated depreciation. So both of those would have affected our fixed assets. Then the next step is that you have to now record how you made this disposal, and that was for cash. So that means that you said credit asset disposal with bank, and bank is increasing with a debit because you received money. If you're still struggling with that, please go back to the asset disposal videos. Right, insurance includes an annual premium. So here's where we say that we made a prepayment, and prepayments are considered current assets in your trade and other receivables. So we're going to add that to our trade and other receivables. There we go. Okay. Next up, we had income that we received in advance. So we either have to pay them back the money for March and April, or we have to give them the usage of the space that they paid for. So in other words, in some or other way, we have to make payment to them, whether it's physical cash or the usage. So it's trade and other payables that we now have more of because we have more income received in advance for those 2 months. If you need the calculations, please watch the previous video. Unused consumable stores. So in other words, I had it in stock at year end, so I can use it in my next financial year. So I'm going to add it to my inventories. It is no longer considered an expense, only because it hasn't yet been used. Next year, it will be an expense. Then we had the company directors who have not yet received payment, and we said that therefore the business has an accrued expense, meaning that a payment that must still be made, so a payable amount. So that is current liabilities, 112,500 over there. There we go. Okay. Then the income tax is calculated at 30% of the net profit before tax, and that's what we calculated the tax to be. So we have our SARS income tax account here already. So this is debit is the amount that we have already paid, and then the actual income tax expense amount goes to the credit side to show that This is what we owe SARS. Okay. So, in other words, we owed SARS, there we go, 106,900, but we have already paid 990,000. So we only owe SARS 79,800 still. Okay, there we go. And that is shown as a separate line item, unless you are doing the trade and other payables note in the notes section of your financial statements. Then you can include it in your trade and other payables. So SARS, and this is income tax. So you have to be specific. Income tax. There we go. And that amount is 79,800. Remember, this is your carried down, and then the brought down will be on the credit side as liabilities should be. Okay, right. The fixed deposit will mature on the 31st of August. So let's go. What is my fixed deposit? Did I include it here already? Yes, I did. Okay, so the fixed deposit will mature on the 31st of August. That is 6 months after my current financial year end. And remember that whenever a fixed deposit matures within the next 12 months, so the 12 months following your financial year end, it's no longer considered a financial asset. It's no longer a non-current asset. It then becomes part of your cash and cash equivalents. 225,000. Right. Then we add the following indicators. So we will just leave that for now. I'll get back to that. But this is kind of an indication now that, listen here, whatever information we were going to give you on your current assets and your current liabilities, that's now done. So you have all the information that you need to be able to complete your current assets at least. We do know there's still a loan transaction coming up, but yes, at this point, it will be that either one of them, you are done. You can now use that to start completing your SFP. Okay, right. So just quickly, sorry, I just want to have a quick sip of water. I'm used to talking a lot anymore. Righto, so now we move on to our share capital. So the company is registered. We've already read through all of that. So we know that they issued all of their shares on the 30th of April, and then there was a buyback, and the average share price at which that buyback occurred was 3 Rand per share. And we also calculated our total ordinary share capital in the end. So we have our ordinary share capital 3750. Okay. But we now need to use this information to calculate our number of shareholders' equity using our number of shares in issue, and then also our net asset value. So in other words, our NAV. Right. So we said that by year end, we had 1.25 million shares in issue. Right. So we don't know what the shareholders' equity is. So I'm going to just say that it's shareholders' equity. You will also see this in some of the information if you do some research. That over the number of shares in issue, we had 1.25 million shares in issue. Okay. Then when we set that times by 100 over 1, it gave us 400. Come on, there we go, 425 cents. So we now need to basically solve for X. But I know people don't like the X, so I'm just going to stick to this. But that's what we are doing. So I'm going to leave this for now. I'm just going to keep it. Oh, bells. I don't know what happened there. 1, 2, 5, 0, 1, 2, 3. Okay, equals. My 425 is now basically on 1 year, so it's at the top. as well as my 100. So when I bring my 100 over, it goes below the line. So 425 divided by 100. Then I'm not done because I still don't have the unknown by itself. So to get the unknown by itself, there we go. Okay, so 425 divided by 100 is 4,25. That times by, because here it was below the line, now it comes above the line, times by 1250. Okay, so in other words, it is equal to, let me just get my calculator. Where's my calculator? Calculator. Okay, 4.25 times 1250. There we go. So this is my ordinary shareholders equity. Where am I at? Oh, I moved on. There we go. So 5, 3, 1, 2, 500. So actually very easy if you know your formulas. Okay. And then we don't have to do the retained income, so we're just going to ignore that one. Next up, we also have the, oh, just FYI, EFT payments were received. It didn't say that we haven't yet recorded the EFT payment, so that's why I'm not showing the 900,000 in my cash and cash equivalents, just in case you were wondering. It also didn't say that we didn't record the repurchase, so once again, we are sorted. Then the loan. So they are saying that my loan, according to the statement, is 928,700. But we then said that we need to take into account that we are going to repay some of this during the next financial year. So we're going to remove from this amount the short-term portion, and we are going to reclassify that as a current liability, short-term portion of loan. So short-term term portion of loan. It's because I'm not using the full screen that the writing isn't working, but we need to see everything. So it's 139,305. And we now already know why we are doing this because we discussed it before we started doing the SFP. So then that now is 789,395. Okay, and at the top there, because it's the total non-current liabilities. Okay, right. So that is it. So we now know that we can't be done with our trade and other payables yet because there was that question mark for the pension fund. So this is definitely not final figures. However, we are done with the non-current liabilities. We are done with the equity section. Now, what we can do is we can add all of our totals. I just want to close this one and do that. So we can now calculate the totals of our current assets. Wait, yes, let me do this. Sorry, I'm all over the place now. Just want to make it easier for you to actually see. I know some people are watching on their phones. It can become a bit difficult. And obviously now it's a struggle. No. Oh my gosh. Okay, let me just quickly do this. Sorry, now I'm messing it up. If I don't get it now within the next second, I will just pause and do it before starting the video again. Okay, there we go. That's better. Okay, it's big enough. So my inventories, I started with the amount as per the trial balance minus the double entry plus my consumables. So there we have that as 1. Come on. Okay, as 1019320. Then trade and other receivables. Add the creditors that we reclassified minus the the provision for bad debts adjustment, plus the prepaid expense for insurance. So 88,193.1. And then the last one, our cash and cash equivalents, plus 65 plus 225. And that is 994,249. Okay, then we just add all of that. 101,9320. And that is 2,895,500. Okay, so remember, for every 1 rand in current assets, I have only 50 cents in current liabilities. So divide that by 2 to find your current liabilities amount. 144,750. Okay. Then you are looking for your trade and other payables amount. So you are just going to subtract all the current liabilities amounts that you do have. Minus 79,800 minus 139,305. And that is 108,365. But remember, you get marks for your calculations here. So if you are saying that your total trade and other payables adds up to this, then you must still tell me what is the amount for the pension fund that you now added. In other words, what is your balancing figure? So subtract everything that you have there already. 0 minus 32,400 minus 112,500. Okay, so your pension fund therefore is 82,645. That's what you've added. You can't just give me the final amount. I need to see the calculation. And that is your SFP.